Hello, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest today, making a return appearance, is Shonda Warner, CEO of Chess Capital Partners. Shonda, it's so great to see you. It's been a while.
Nice to be back.
Now, I remember last time you were here, maybe about 2 years ago, actually, and I know your specialty is the agricultural, the grain markets, and you made a bearish call at the time, which was not an easy thing to do. Everybody was very, very bullish, but that was an extremely prescient call. That was really very close, or the top of the market. All ag prices across the board have come down significantly since you made that call. So yes. I'm very, very curious as to what your outlook is now. You're going to make a bullish call now.
I wish I could make a bullish call now. I'm sure my investors would be happier. But I feel like maybe we're not quite done.
Really?
Yeah. I think we have a lot of grain online. And again, barring unusual weather, or increased political turmoil. If you think about it, think about what we're seeing across the Middle East, everywhere in the world. That Ukraine, I would have thought that would have held things up better.
Right, so, exactly.
Right, if if things improve a little bit, that's not necessarily positive, right, for the grain complex. I also think that a continued bullish dollar is, again, not a positive thing. So it's not easy for us who invest in farmland. We sort of trundle along. I tell people this is a time where, on the sunny days, you put your money in the bank and save for a rainy day, and we've got a rainy day in the grain markets here right now and in New York, right?
Oh, yes.
All up and down the East Coast today. It's pretty tough weather.
But it's 95 and sunny in here. Just want everyone to know.
Yes. So I think that we're not necessarily done. And I think when we sort of bottom out and everybody's truly terrified, maybe it sits there for a while. All of us that have been in the markets for years and years and years are very familiar. In fact, much more frustrating than times when markets are moving are times when the volatility goes entirely away. And we could sit for 12 to 24 months in a pretty painful spot. So I keep telling folks, buckle your seatbelts and just hang on. Any place that you can reduce your leverage, reduce it, and just ride this through, because it will come out the other side. And I think that all of the big global long-term positive trends for agriculture are in place. And we'll see some sort of a rally to a mean or an equilibrium. I don't know whether that's back to $5 or $6 corn. Of course, it will spike again. I kick myself. You just always sell beans in the teens. I don't care that it's 20.
That still applies. That still applies. Funny how that works.
It's amazing.
I wanna ask you about the long-term bullish fundamentals, but first I just want to make a comment. And that is, the market did respond to fundamentals at the end of the day, and it's trading like typical commodities have always traded. You have a supply or demand shock, which knocks it out of some equilibrium level that had been in place, let's say, for several years. And we had the adjustment to that supply-demand shock with more supply, right? That was the market actually working as it's supposed to work. Prices have come down. We're back in an equilibrium level. So let's talk about the longer-term bullish fundamentals. You mentioned that briefly. I want to get into that a little bit more. What are those?
Well, I think that we still need to double our food production, right, in the next 20 years. And that's a tall order. And I guess
But hasn't that always been true? I mean, world population grows, we produce more food.
We've had this incredible linear increase in yields across the board. But I'm not convinced technology is not necessarily linear. It can be explosive, or it can flatten and not do much, right? Look at how long we've had the car and the airplane. I mean, we really haven't improved on that.
The airplane, forget about it. I think it's gone backwards, right?
Worse, right? And so we could have some technology plateaus, right? There could be small improvements. There's really sexy beans that some of the seed companies are working on. that have a higher protein content. There's beans that have a shorter growing season, very, very interesting. There's drought-resistant seed that's coming online. So all of those things are great. But, maybe we won't see the same increase, and that could be quite positive, right, for the grain complex. I also think that when if the dollar rallies for a little while, everybody else may eventually start to recover. China will have its blow up and sort of come back. And, the dollar will, as usual, move down. I mean, everything's cyclic, and we have to remember as commodity investors, right, that's all part of the game.
And when you were here last time, the dollar was under pressure, and now it's been performing quite well. So you mentioned China, and I'm sure China has been a factor in sort of the bearish trend that we've seen over the past couple of years, a slowdown in the economy there, a policy, I think, geared over there to, on the one hand, trying to keep demand supported and employment, but then kind of like working against that goal as well. We see the economy slowing down. How much do traders pay attention to sort of, the month-to-month developments in China?
Well, I don't know whether it's month-to-month, right? Things in the trading world tend to sort of gather or lose steam, and one little seemingly inconsequential,
turn everything
around because it's just the pressure's built up in one direction or another, and it moves, and then the price action really takes over and everyone reacts. But I think that when you look at the underlying fundamentals, I mean, remember, we do farmland and farming. We don't trade grains,
right?
Right, in our business. Those kind of react more slowly, and I think probably in time with the fundamentals, they might lag. Right, we lag, and so grain prices move. Farmland prices maybe have started to come off slightly. I think there's more room to come off further, and then there'll be a buying opportunity.
So farmland prices have they started to come down, or they've come down in tandem with?
They have not.
No.
They've been slow. People, they're not heavily leveraged. I think we're still in a world of low interest rates.
Right.
If that were to change too, that to me is a sort of a aha moment that's yet to come.
So it sounds like farmland prices are more aligned with real estate trends as opposed to just the commodity market, the agricultural commodity markets, no?
No, I don't think so. No, I think historically they're not. But right now, because we have such low interest rates, everybody's searching for yield in the real estate, in the stock market, across the board.
Right.
Right? So farmland has not been immune to that. But as people who bought farmland who've never owned it before, don't know that much about it, right, have purchased it and seen prices come down so much, I don't think they're used to the volatility of the underlying. I think they're learning some lessons that they perhaps overpaid.
Now, who's buying it? I mean, you run a hedge fund, right? Hedge funds are coming, private equity funds, just like they were coming in and they were buying foreclosed homes and they were renting them out. And you had like BlackRock and these huge Wall Street front. That's the market participant now would be defined as those financial firms?
There's probably the last time we talked, I don't know if there were 20 sort of agricultural asset management companies, and there might be 60 or 70 now, so there's certainly a lot more that have come on stream. But I think a lot of high net worth individuals as well have said, gee, I'm earning 1% in the bank or less.
Sure.
I might as well buy a farm and rent it out and have some income.
What about foreigners? Do you see foreign cash inflows into that area?
Massively. Massively. Huge Argentinian buying that we've seen over the past few years.
Brazil?
Some extent Brazil. I think the Argentinians are worried about default, and I mean they have a stickier wicket, right?
Yeah.
And I think that just in the past year or two we've seen Chinese buying.
Chinese coming in. Mm-hmm. All right, well, it's great to have you back here, and, great call the last time, and we'll be looking forward to seeing what happens.
What happens next, yeah.
Sexy beans and sticky widgets and all.
Rickets, yeah.
Rickets. All right, that's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.
Bye-bye.